Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, everyone, and how are you today, Peter? How's the week been? I hear it's been quite busy.
Yeah, always busy. And sort of an interesting thing this week is our alternative investment fund that's called our high-tech defense fund that we
Mm-hmm.
opened this spring or Q1 this year. We so far had 6 investments, and now we took on a investment number 7. And that is always creating a bit it's very interesting because it's high tech defense what we are investing into. So it's sort of half James Bond
That's great,
and
though.
looking into the future. But that was sort of an additional thing this week, and as just extremely interesting for us when we invest in new investments. So what about you, man?
Oh, it's been an exciting start to the fourth quarter of 2024. Time flies really fast. And it's been an exciting week trying to monitor everything that's going on in the global economy. And
Yeah.
speaking of that, yeah, we have a lot going on right now. And today's podcast will try to tackle some of that. So for today, we have a discussion on the latest news about Iran's missile attack towards Israel and how that's raising tensions in that Middle East area. And we also have the so called new Netflix tax coming into effect in the Philippines. Today, we'll also discuss in neighboring Thailand cash handouts of about $300 that will be given to over 40 million residents to reinvigorate their economy. There's also an ongoing labor strike across US ports since Tuesday, and it's been affecting supply chains. And of course, we'll discuss our house view on the global financial markets.
Yeah.
So let's jump right into it, Peter. What's happening that you've seen that's very interesting or noteworthy for our listeners this week?
Yeah, so you mentioned, of course, we need to give the Middle East some thoughts and some attention. And of course, it is sort of a escalating of the conflict of the critical situation
Mhm.
that Iran was launching the missile attack on Israel. And clearly, everybody are waiting for how could Israel do sort of a counter strike, so to say.
Yeah.
So that we need to give consideration. One argument we raise here in the company
Mm-hmm.
is the overall political and society environment in the whole Middle East has changed, in particular within the past 2 decades.
Right.
So let's say it's not enough just to do a comparison with 2006 when Israel last time made a major invasion into to part of Lebanon. Since
Mm-hmm.
then, many Arab countries, the oil-producing countries, really have done a lot to increase the living of particular the standard of living for particular middle class incomes.
Mm-hmm.
Um, there's there's a lot going on. We have seen how the same countries try to attract all kind of big sport events like the World Cup in football, everything
Right.
trying to as a gain popularity with their own population, but also across the world. We argue that a lot of Arab countries and sort of across the Middle East, they're not really willing to give up all these gains
Mm-hmm.
for as a sort of in a war with Israel. And we actually saw it after the Hamas attack last year in October,
Right.
exactly on the same day. There was immediately a contact between the highest level, political level, between Saudi Arabia and Iran, and that
Mm-hmm.
has not been seen for like 10 years. So there's a lot of sort of forces, political forces working in the background, trying to de-escalate the situation. And I see that's very, very positive. And I actually think it could be, we argue, it could be a good indicator of the tough work there will be to avoid a, a sort of a total war-like situation or escalation. And that's positive element.
Mhm.
Not reckon has been priced in the financial markets among investors. So we see the risk as lower as the market maybe would see it. Of
Uh-huh.
course, if there's an escalation, oil price will go up. If there's an
Yes.
escalation, global stock market will be hurt for some days. But we
Mhm.
actually, I think there are some other positive elements working in the background, and that is it doesn't mean that we're not worried, but
Mhm.
um, we argue it needs an even worse situation to escalate abnormally. So this is sort of our take on the situation, but we're fully aware of all the risks that an escalation can
Yeah.
impact. Yeah. Yeah, that was sort of Middle East right here. But yeah, let's go back to your area, Mel. You had a good
Right.
start in the Philippines.
Yeah, so actually, in the Philippines, a new law has just come into effect that imposes the value added tax of 12% on subscriptions and transactions done by foreign digital service providers. So it's actually earned the nickname Netflix tax here. So your subscriptions online, like your Netflix, your Amazon, your Temu orders, they're going to be covered by the 12% VAT, just like how your purchases from domestic companies or sellers should be taxed. So it's said to be a good thing. I see it as a good thing because first of all, it will raise revenues for the public sector. The
Mhm.
estimate is about 105 billion pesos. So that's probably one major infrastructure project already, although that's in a 5-year projection.
Yeah.
And it's also gonna put some level playing field between foreign and domestic merchandisers or retailers, because it makes everything uniform. Although I must note that the value added tax in the Philippines is higher relative to its neighbors, like Indonesia is at 11%, Singapore at 8%, Thailand at 7%.
Mm.
So initially there are some concerns that this could turn away foreign service providers from doing business in the Philippines. But I see that the Philippines is such a vibrant consumer market currently that it's hard for them to ignore. So even for the additional administrative stuff that they have to do, like they have to register with our Bureau of Internal Revenue, they have to change the way they send their invoices, their receipts to
Mm.
their clients, and they have to withhold and remit and taxes to the Philippine government. It's still a very much active market. It's growing well, where growth is absent elsewhere. So it's a good move that could help diffuse the public deficit as well. So something exciting to see for the Philippines.
As you say, and I can see it myself physically when I visit Manila, how as a
Right.
leader here we know it, but the private consumption in the Philippines is extraordinarily strong.
Mhm.
People they like to spend money, and and that's good. And still, the household debt is actually sort of manageable. It's not that it is sort of credit financed. Yeah. So
Mhm.
we see it. Yeah, it is positive for the Philippine economy. There's no doubt that Southeast Asia economies and the governments are trying to keep the economies growing at a high level. Is it
Right.
sort of the same? To see the same tax regime, same taxes in other countries around the Philippines?
Well, in terms of taxing foreign services, it's actually common, and the Philippines was quite late to the party. Um,
Okay.
But yeah, the move really in this part of the world is to stimulate consumption, domestic consumption, especially at the time when global demand is weakening, largely because of China's slowdown.
Mhm.
Actually, in nearby Thailand, there is a government move to stimulate their local economy through handouts. We actually discussed this in our uh, very recently released China and ASEAN Quarterly magazine, right, Peter? So
Yeah.
it's been a long time being planned, but the Thai government is handing out 10,000 baht, a one-time stimulus in cash, or
Mhm.
$300, more or less, to 45 million of its residents to basically jumpstart consumption.
Yeah,
And
yeah. This was this was too interesting not to cover. Yeah, it's
yeah.
it is sort of the hour as the earnings in or salary levels in Thailand they vary a lot. Yeah, but this was 10,000 baht handing out and a sort of an average salary in uh,
Mhm.
not necessarily in the low area, but sort of an average could be like 15,000 baht. So it's like two-thirds of a sort of an average monthly salary. So that is yeah, it is measurable certainly. It's if the whole support program will be spent, then it's
Mhm.
like equal to 3% of GDP. Only
Yeah.
like I think it was like 0.4% will be have effect this year is what the expectation is. So it's more next year, and it's sort of a next year thing. It just has so many interesting perspectives. First of all, does it work? What
Right.
do
Major question.
um, experience is that it rarely works. Yeah.
Mhm.
It's been seen before. There are structural problems in the Thai economy,
Right.
and the growth is just below 2%. And you
Mhm.
could say, okay, 2%, wow, that's much better than Europe. But in the peer group, yeah, the ASEAN countries, 2% is nothing. Yeah. It
Yeah.
needs to be around 5%, let's say so. Yeah. So it's where we say, okay, the Thai economy is actually uh, somewhat more slow, and
Uh-huh.
it is a large economy in the Southeast Asian region, the second largest, yeah. So the thing is, what you and I we discussed, yeah, does it work? Yeah, we say more no. Of course, there will be a multiple effect. The money is sent out, and they might be spent.
Right.
Um, but and then of course it goes on, and that leads to more spending. But
Mhm.
but the key is, as we also seen China coming with a sort of a major move to
Right.
um, support the economy, but also it's a bit aimed towards the financial markets actually.
Mhm.
But um, the Southeast Asian countries they do have the fiscal muscle mass
Uh-huh.
to support, yeah. And that is what we discussed as the outlook is actually quite good in terms of growth right now.
Right.
But should there be too many sort of headwinds from a slower growth globally, then there is a muscle mass, fiscal muscle mass, economic muscle mass in the region to support the economy, like as a handing out
Mhm.
money or do real sort of reform support to the real estate market like in China. And do we think that could be sort of simply next steps if the
Uh-huh.
ASEAN countries they are come too much under pressure? Would that be sort of these efforts or these initiatives would they spread? You think?
Well, my concern really about it is, of course, it's nice to like if you're the Thai citizen, right? You get okay, I get free $300, but the concern, on a macroeconomic level is this the best way to spend about $14 billion?
Mhm.
Do you do? Do you do additional projects, public infrastructure, for example, or is it better to hand it out directly? Because the concern here is you want the consumption, domestic consumption to increase, right? But taking into account the fact that Thai households have a lot of debt at 90% of GDP. What
Mm.
if they just spend the money to just pay off what they owe, right? So that's not
Yeah,
necessarily the multiplier that you're looking for as an effect of this
mm.
handout. And the last time I've seen handouts, at least in Southeast Asia, was at the height of the COVID-19 lockdowns, but that had a different effect. It was more keep them on survival mode because people lost jobs, people couldn't go to work, and that was very effective because they needed it. But this time, it's a very different approach and goal. Same way with China, which we discussed last week. You're correct that they're both they both want to stimulate domestic growth, domestic activity, but very different approaches. And yeah, especially if it's funded by public borrowing, it might just be taking money from the future, but not really sure if the goal will be met. So that's the question, I think.
I agree. If governments they want to take these kind of initiatives,
Mm-hmm.
it's the only way to get it to work. Otherwise, as if it's a crisis situation, as you mentioned during the COVID-19,
Right.
people simply needed some money to survive it. Yeah, that's another story. But here, it's just sort of the government is firing off sort of an economic rocket, and it will go
Mm-hmm.
somewhere, and then yeah, and then that's probably it. Yeah. Um, they if they want some substantial change, they also need to do some reform work. Yeah,
Correct.
also of the economy of the economies. So they um, and reform very often means that the negative effects they are sort of the initial changes. The first things what happens is you do
Mm-hmm.
changes. You need to, if you want to reform, you shift. So you basically maybe shift how the government budget is built together, and then there will be a negative effect, and there will be a positive effect. But the negative effect is often the first thing to happen. And there
Uh-huh.
you could say, okay, to compensate for this first negative effect, you could
Mm.
do a for example, a cash handout, and then it actually bridges into the positive effect of the reforms. Then
Right.
there will be sort of a two-step positive uh,
Effect, yeah.
into the economy. These kind of things is, in my view, a better way of doing things.
Mm-hmm.
Um, but interestingly is if the Southeast Asian region they do have the muscle mass to take all these kind of initiatives to um, to keep the high growth level and to keep the domestic consumption, the domestic economy at a high level. And this is actually what we argue. Yes, uh,
Yeah.
that is also an option. It's not necessarily it will happen, but it is there and there's an option. And that is basically what the US and the European area, they cannot afford to do so.
Uh-huh.
Uh,
Correct.
Yeah. So this is why we and another reason why we favor Southeast Asia as one of the things to upgrade in the portfolio.
Mm-hmm.
So
Right. The
yeah,
growth is still really much here, even if the Thailand economy is a bit slowing down relative to its peers.
yeah, exciting in Asia. In this area,
Yeah,
we're a bit more troubled. Now we might face a supply chain risk again with
right.
the strikes going on in the ports in US.
Yes. It's been going on for just about 2 days. So, about 25,000 port workers in the US are on strike currently. And the White House has said that they're unlikely to invoke this act that requires the workers to go back to their jobs while negotiations about the wages are ongoing. So, it's
Yeah.
quite a tricky situation at the moment. But what we know is 14 major ports are affected, and
Mm.
food supplies to restaurants to groceries and about are have been stalled so far. There are reports that cars and car parts are also stalled, not just for American brands, but even European automakers are affected. It's a bit early to into that strike, but of course, it's worth discussing, Peter. They've been blocking shipments since October 1st, and they want a 77% increase in wages. The union of the operators in the port have offered 50%, but they didn't take it. So they're at a standstill right now. What are our fears about this, Peter? I know that it's a bit early, but of course, the fear is always about how this will affect prices, and global supply chain disruptions are likely to come.
Yeah, but I think it's a valid risk to discuss. As we have seen earlier, how fast supply chains
Right.
simply break together. Yeah. Are companies running with bigger storage of the most important sort of parts, whatever they need
Mhm.
in their own internal supply chain? Probably yes, but this is still very sensitive. Yeah. You could say it's a fantastic timing. Yeah, one month ahead of the U.S. presidential election. There's
Right.
nobody dares to touch the port workers. Yeah, it is of course well considered also, no
Mhm.
doubt. It's very critical timing, and as a yeah, we have discussed again internally and saying, okay, based on earlier experience,
Mhm.
when is the global supply chain sort of at risk? We can say if as of still the the Asian part, as a if we saw it in the Suez Channel, yeah.
Yes.
If the supplies from Asia are interrupted, then it actually affects
Everyone else.
yeah, it goes very fast. Yeah, it just takes a week. Yeah.
Very.
And of course on the U.S. West Coast, that is the stuff from Asia coming in.
Mhm.
Uh, but more and more U.S. companies they have their supply chain from Mexico. We have sort of said, okay, maybe after 2 weeks strike, then investors start to be nervous, and then it will start to show some effects. But
Right.
what happens? What happens if as we talk about enormous increases in salaries? Yeah? Could
Right.
it's certainly not as what a central bank would like. Yeah, as this can get Fed to sweat. As this is could this even sort of delay an interest rate cut? Yeah,
Yeah,
we
that's the
argue.
main concern.
Yeah, yeah. We argue not as at the moment not. There will be another cut of 25 basis points. Yes, but this is substantial. Yeah. And
Yes.
we started today's conversation with the risks in Middle East. Yeah. So there is a risk, price risk on the upside for oil. Yeah.
Correct.
And that is of course also affecting inflation a bit. I don't think that will again. It wouldn't harm any central bank and the rate cut decisions. But then we have all of a sudden all these features coming up that is a bit um, unpleasant for central banks. Yeah.
Mhm.
So far we are on hold, but it can be a critical situation, and we've seen how fast it works. But we sort of say okay, another 1.5 week, so it's sort of
Mhm.
total 2 week strike, probably can be handled by the economies, the companies, and so yeah. But we pay it attention.
Yes. So the nervousness is really coming from, the effect it will have on inflation, not just in the US, because the supply chain disruption potentially could be worldwide, and it would drive up inflation. And then the next round effect of the wage increases that are being asked for from the importers and exporters in those ports are also going to be passed on more or less to consumers and manufacturers. So it's
Yeah,
gonna be a rocky path ahead for those negotiations. So everyone needs to watch out. Yeah, yeah. That's correct.
yeah, I agree.
And how does that play into our global outlook, Peter? I know we do this every week. How are
Yeah,
the risk? How's the risk outlook looking like with these very fresh developments?
yeah. So normally, as our long term view is, we like risk, so to say, and we almost feel we promise sunshine every week. Yeah,
Mm-hmm.
that we do like overweight in equities, we do like overweight in emerging markets debt, all sort of the risk areas we like to be longer, sort of long in duration, meaning have
Mm-hmm.
longer maturities in the bond fixed income portfolios. And we could say all the company components we have talked about today, they are sort of risk components that is increasing the risk uh,
Yes.
against this, what I would call it, positive outlook, basically.
Mm-hmm.
Uh, uh, um, so that we are very much aware of, but we don't change our outlook so often, and and
Mm-hmm.
and we could say the risk for setback in the equity market, for example, is increasing. As we
Mm-hmm.
are seeing the central banks, particularly Fed, lowering the interest rates as has been priced in, but when it happens, it has always a positive sort of uh, effect on the environment. But
Mm-hmm.
but but we certainly recognize that the risk part as a sort of for a setback in the markets is growing. We are not. It doesn't lead us to change the overlook, our sort of overall outlook. What's the feeling in Asia,
For
Dorothy?
Asia, of course, the recent Fed move has led to a rally in most of Asian stocks. Um, this recent move by China and possibly of Thailand could also lift positive sentiment further towards Asia and Southeast Asia, where growth has really proven to be robust, especially relative to the Americas and Europe. So we like the growth that we're seeing, and we think that stimulus moves, especially like last week, for example, from China, it could be helpful, and we'd like to see that it really achieve its goal of perking up domestic consumption further. So as we see that, we are still very optimistic about our positions here in Asia. So that's all that we have for today. Thank you for listening in our podcast. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.